What up, what up? Replayers. Pip killers, where you at? Who's ready to do this? Who's ready to do this? Let me see some shares. Let me see some hearts. Guys. Look what's happening. 12-12. What's up, bail buddy? We're at 12-12 right now. What did I say, guys? I said we're going to have support right here between 1220 and 1200, and that's where it's been for literally most of the day. Boom. Hashtag boom, guys. Bail buddy, thanks for the invite, brother. Guys, we came into this region, and guess what? Thank you for the shares, guys. Thank you for the shares. Who's ready to make some fucking money? Come on, man. What else are you going to be doing tonight? It's 9:45. Everybody else is watching TV. What is everybody else doing? Is everybody else trying to learn? No. Is everybody else trying to make money, trying to make their lives better? No. We're here doing this. So, we came into this position. We've got support. Lots of candles in this area, guys. Lots of money action. Big money is trading in this region. In a state of indecision. Steve, what's up? Thank you for joining, guys. Appreciate it. Simeon, thank you for joining. You can see going all the way back, guys. Going back to last month, we've got tons of price action in this area. What does that tell us? What does it tell us? Indecision about price. People are having difficulty putting valuation on the Euro USD cross. Okay? Now, guys, this is about to get political, not in terms of the scope. But guess what? When the elections roll around, that's going to also increase volatility in the Euro USD cross. Because no one knows what that next person, next leader of the country, no one knows what economic decisions they're going to be making. Saved man of God, how are you? Thank you for coming in. Raw Steam, what's up? I appreciate all the shares and the hearts, guys. Lets me know that all the time I'm putting into this and giving you guys something that's actionable makes me feel good, man. I want to see people kill it this year. I'm tired of seeing people struggle. I'm tired of seeing my friends not do well. What's up? A. Diaz, what's up? So we came into this support level. The question is, now what? What do we do? What is our course of action? As a trader, you always want to be asking yourself, how did I get here? Why am I here? And what is my next step? Those three questions. How did we get here? We went short at 13.18 all the way up here, man. We went short. We rode this bad boy for 80 pips downward. Right. We rode this bad boy 80 pips downward. We took a 20 pip loss because we got stopped out. And now we're waiting for our next signal because we are in an area where a lot of different indicators... What up, pimp? We're in an area where a lot of different indicators are having what is called confluence. That means they are fighting each other and about to align or possibly align in one direction. Now, I will tell you, what am I thinking as a trader, okay? What am I thinking as someone who has 8 years in this game? Here to improve. That's good. What I'm thinking as a person who has time in this game is two things. The first thing is this level of support here, okay, could be an opportunity to go long. But here's what I want you to know. This long candle here, you know what this is? Like I said, volatility caused by the Fed, caused by the FOMC announcement. They caused this crazy volatility, and look what's happened. Already people they've taken their profits on this volatility, this position. They don't want to hold this position because they know that this volatility may not be representative of the true supply and demand within the Euro USD. Okay? This may be artificial, they're thinking. This is what seasoned traders and banks And I'm not talking about people trading millions. I'm talking about people trading billions with a B. Billies. Millions ain't shit in this game. Okay? These positions, to make a price move like this, we're talking $1 trillion. You do not make this type of price movement with a few hundred million. It is not possible. That should give you an idea of how much money is in this market. And there's very big players, very serious people, very knowledgeable. Okay? So, if we've already retraced this entire candle, the power, we've already retraced this candle all the way, guys. So, what is that seasoned veteran in me saying? This candle, oh buddy, this candle here, all these guys that bought down here, if someone is still holding on to this retracement, you think they're going to hold on and let this see all the way down to their gains? No. So what is likely to happen, guys? If we fall through this area here, which is the 1200 level, you are going to see a very large candle downwards, because everybody's going to say, I am not holding this long position that I made money off of and letting this return all the way down to net zero. As a trader, you never, ever let a position win and then come back to zero on you. Ever. Ever, ever, ever. You never do that as a trader. Well, in this case, right, you want to cut losses quickly, but in this case, these would be people that bought down here. And they're thinking, man, this is looking like a good place for support, man. I just want this to pop back up and then I'm out. That's what they're thinking. You got to get into the minds of these people. Okay? Get into the minds of your competition. Alright? If you held a position that you went long anywhere in this area, even this candle, man, when you see a position come back on you like that, guess what? You want to hold on to it. That is the losing mentality. This has been proven in psychology. It's called behavioral finance. There is actually now degrees. Alright? There are degrees, master's degrees in school in behavioral finance, studying nothing but the psychology of winning and losing and taking bets and the financial markets. So, I will tell you guys, man, this area is the area to be careful in. And as a novice trader, you're going to see a lot of people will go into this position long. A lot of people. And let me tell you, that would be a huge mistake. Because the danger to the downside, what's the risk to the downside? Our next area of support, if we break through this 1200 level, our next area of support is 1075 down here. 1090, 1075. That's 100 pips. So we have 100 pips of risk to the downside. What do we have to the upside? You think that this is going to come all the way back up here? Look at, we've already got a double top here with two candles. This would have to have an extreme amount of energy to come back up to this point. It's not going to happen. We might get a fib retracement to 50%, but it's not going all the way up. That's not going to happen. All right? What is likely to happen, guys? I'll tell you what is likely to happen. This is the Euro USD cross on a daily chart. All right? G-Easy Forbes. Mama, I made it to Forbes. So, here's what's likely to happen. Novice traders and retail traders, man, they're going to... Big Face, what up? What up, guys? Let me know where you're from. I like to know where you guys are from. Novice traders are going to be in this area. We're going to keep this in here, guys. The novice guys, they're going to be trading long, short, and I'll tell you what's likely to happen. Once this falls through support, we're going to get a 50 pip candle downward. New York City's in the house. I don't scalp because I'm going for hundreds of pips, man. Now you see, system is saying, we might be going long here. What is my system based upon? Artificial intelligence. I code. This is what I do. So, what we got to look at, guys, is that we got to put ourselves in the mind of the retail novice traders. And they're likely to keep this moving sideways in a range. Okay? And then, what is likely to happen? If we get some strength upwards, I'm telling you, you got to be careful. Do not sleep on this position because we're most likely going to see a candle downwards. Because the next area of support is right here. And we have 100 pips of risk to the downside. And this candle right here, the high is at 1259. That's only about 40 pips of upside potential. Alright? Yesterday, people thought that this was an expensive price for euro. What's your opinion on binary options? I'll get to that in a second. Yeah, I'll get to that in a second. Now, check this out. Yesterday, people thought that this price level, 1256, was expensive for the Euros USD cross. So, if we go upside, just yesterday, people were selling at this point. Do the math, guys. That's 40 pips upside potential, 100 to 120 pips downside potential. Is that a risk-reward ratio that you would take? Pretend like it's a fight. Would you let someone punch you in the face 3 times for every punch that you get? No, but that's what this is, guys. This is a fight. This is a fight. These people want your money. Right? Heart it up, guys. Come on, share it out. These people want your money. Alright? You know what they say? Getting the money is a lot easier than keeping the money, man. Because as soon as you try to keep your money, people will try to take it from you. And I promise you that that is 100% true because I know a lot of wealthy people. People that are much wealthier than me. And let me tell you, that on a daily basis, they're figuring out how to not get scammed. Most of them have very, very big trust issues for that specific reason, including their personal life, not just business life. But, sorry for that little aside, but it's true. It's hard to keep your money. It's hard to earn it. It's hard to keep it, especially as you start earning things in the Forex market because you could get cocky, man. And my intensity is right now, I'm not cocky. I'm not cocky. This could be lost. Positions could be lost by anybody. Best traders in the world, man. Knight Capital, I showed you guys yesterday, 440 million lost, losing $10 million a minute. Losing $10 million a minute. And these guys were the best coders in the industry. Alright? So never sleep on your position. Some people say you gotta earn it daily. Well, we earn it by the pip, man. We earn it by the pip. So, what I'm saying is a word of caution to you guys. Be very wary of this level here. This is looking like support. I don't think it's support. And if it is, it's not likely to be much of a support because we got too much risk on the downside compared to the upside. And traders know that. All right? So when you've got too much risk to the downside compared to the upside, traders, the very skilled banks and the guys that are running large portfolios, they're not going to want to go long here. The retail guys will go long, and this will show a little bit of a pop. All right, maybe even as high as this candle. We may go up to 1250. But just keep in mind that yesterday, people thought 1260 was expensive. Yesterday, people thought this candle up here on the top. Yesterday, they thought that was expensive. All right? So, how do we play it from here? You sit on your hands, especially if you're a novice trader. You don't do anything. Okay? What we're looking to do is, if you're a novice guy, meaning, man, you are just probably your first year in trading, we're looking for a break of this candle, and you would just hop on that and go short with it. Okay? That is your play with the least amount of risk if you are a novice trader. If you're an advanced trader or a systems trader, obviously you're relying on your systems to tell you what to do. At this point, if I was managing a lot of money, what I would do is I would be going short here. Balut, what's up? Thank you for hopping in the room. Appreciate it. I would be going short specifically because the signal taken prior from 1318, which was exactly on the spot. Guys, on Friday, I called the short up here, guys. Go back to my scopes. Go on catch.me. You guys see all my social networks? Go on my social networks. Go on to Catch, and you will see. I literally called this short live on Periscope. There was like 2 people in the room, so 2 people made 80 pips. And guess what? 80 pips is about 80% of the move since Friday. So you tell me. I just like to know if are there any other Forex gurus, mentors, or anyone giving away free Forex information that made 80 pips over the weekend? Or up until Monday? There's not many, right? I want to know who they are. I want to hop on their scopes. I want to see how they're doing it, if there are. I'm being serious. But I don't see many people doing it. So, yeah, it's not many. Because a lot of people obviously didn't want to make that call over the weekend. But I told you guys that on Friday, that if we make a call over the weekend, we gotta really stay on top of it on Sunday night. Because as soon as the markets open again, 5 a.m. Eastern time, when the markets open, okay, you got to be careful and see how Asia reacts to that. Thank you for the invite. Appreciate that. So, what is likely to happen tonight, guys? We are likely to see, it's 10 p.m., okay? Between now and about 2 a.m., we are likely to see not much in terms of movement. We're going to see some retail traders taking some very light positions. You're going to see maybe 10 pips up, 10 pips down. It's going to look like it's crawling sideways. It's going to look like the market's dead. Do I stay up all night? A good amount. I will say that. I need to clone myself. I'll be honest with you, little boy. I need to clone myself. But check this out. What's going to happen when Asia opens, guys? Okay? When Asia opens, you're going to see a tick up in volume. Now, we don't know what the exact measurement for volume is in Forex. It's hard to track. I told you that was one of the hard things to do as a programmatic trader, was to see volume in the Euro USD cross or any other currency pair. However, what we're looking at is the fact that there's going to be tick up, and those traders will align their positions around 2 a.m. either up or down. And that's where the big money is going to start moving the market, up or down. Because those guys are not retail traders. Those are banks. So you got to know who your competition is. See, trading is much like a street fight. Okay? You can't tell how good of a fighter your competition is by looking at them in most cases. And that's a good thing, because in the markets you don't know who's trading. But you know that when that market opens, it's very likely that these aren't going to be retail guys moving these pips. Right, rookies versus banks. You or I cannot move this market. There is no way we could spend our entire life savings and it's not going to move this market 1 pip. And actually, I venture to say most of us could spend all the money that we make in our entire lifetime and it wouldn't move this market a single pip. Okay? These positions are extremely large. 5.5 trillion traded every single day on the Forex markets. Normal lot size per trade, anywhere from 100 to 200K. So it matters depending on how much conviction I have. So there is no norm, because obviously the system will tell me what the probability of the trades are. So high probability trades, like this position right here, guys, you could take this position. You see it's actually at 12.12. That'd be funny if we get some type of selling as I'm talking to you. I don't see that happening though. But here's the thing. This position here, if I wanted to be a running gun trader, man, I could take a position here. However, since the risk is higher than the reward, I'm going to have to either play this as a scalp with a very limited amount of risk. Okay? Lot size is not going to be big. I could just say, I'm going to do 20 or 50K lot size, right? Just to kind of get a feel if my gut was right or whatever. Let's say you're a discretionary trader. You want to see if your gut was right. You could do that. However, it's not recommended, because those types of those habits are going to carry over when you start trading larger amounts of money. So you want to be as strict as possible. Yeah, boy, that's you know, that's kind of by design. You don't have to worry about that because obviously it's going to be hard for me to explain it. And your opinion on leverage? Very good question. You manage risk dependent on, you know, I just wrote about this, okay? Now, a long time ago, there was a guy named Kelly who created what's called the Kelly criterion. Basically, it was a way of determining what the optimal size of a bet is compared to your history of winning and losing and the probability of the trade. Now, let's just attach a probability to this, all right? It's much more probable that we go downward than upward, okay? However, we're trading in a range, but since we have more risk to the downside, let's say we have 50-50 probability from this point. You have a 50% chance of losing 120 pips and a 50% chance of gaining 50 pips or 40 pips. Now, if I say heads is gaining 40 pips, tails is losing 120, okay? Who takes that bet? And how many flips of the coin do you want? Come on, let me see some interaction, guys. Who takes that bet? Heads, you win 40 pips. Tails, you lose 120. And that is the situation we're in. Guys, let me see some hearts. Right. Right. Your probability in this instance, 50-50. Could go up, could go down. However, because we have more risk to the downside, the penalty for landing on tails is much greater than the reward for landing on a heads. Now, I will tell you this, that mathematically, if you're presented with this situation, there is only one way to win. Do you know what that is? There's only one way to win this situation, and that is to place 100% of your capital on one coin flip. Because the more the coin flips, the more money you lose. So the only way you could possibly win is to land heads the first time with all of your money and then walk away. Right. So how do we measure risk versus reward? How do we determine what to place on here? It's fair to say that you don't want to place more than 1% of capital per trade. So if you have a $50,000 account, you're placing your risk of a loss cap at $500. And so you would take a position, all right, based upon whatever parameters you're using to value Euro USD cross. If you end up with a $500 loss, no matter what your gut tells you or your indicators or whatever, you have to exit that position. Okay? Next time around, you do the same thing. So now you're at 45,500. Now you cannot lose 500. Now it's a little bit less, right? Right. So now we can lose $455, right? Let's just call it 450. That is now our new loss. Stop. That is our stop loss. And so this is how we do this. As you win more, you can take larger bets. You can place a little bit more risk on the table. But if you start losing, now you have to reduce your acceptable loss. You cannot keep the same acceptable loss on the table. That is how you will get wiped out. So what does that do? That rewards us when we're winning, and it penalizes us if we're making bad decisions. That's life, right? We get penalized if we make bad decisions. We get rewarded if we make good decisions. Well, Forex just takes that to immediate satisfaction, all right? You will know right away within one day if you make a good decision in Forex. You will know within 24 hours. If you make a bad decision, you will also know within 24 hours. That's why I love this market, right? Forex takes it to the extremes, man. You get a high five almost instantly. Right. If you are putting this much time into school, you're going to wait 4 years before you even have the potential of getting it back? Right. Sometimes you'll know immediately. Especially if your system is working well. Anyways, guys. Mayra, how are you? Mayra 356-82689. 82689. So, guys, how do we play this? Like I said, we sit on our hands, okay? That is all I'm telling you right now. We may get the bump upwards, but I am not placing a lot of faith, nor would I want to hold that position for a long amount of time for the reasons given. Forex equals Russian roulette. No. If you know what you're doing, Forex is extremely lucrative. There is no such thing as anything that's Russian roulette when you know what you're doing, right? A lot of people would say that about race car drivers or skydivers or whatever. But fact of the matter is that if you do everything according to plan and you limit your risk, then you shouldn't have anything to worry about because it's math. This is math, guys. This is the math game. This is the math championships. This is the math Olympics. People want to talk about the math Olympics in high school. The math Olympics isn't in high school. This is the math Olympics right here. Right. Current position will be hands off Euro USD. And we are looking for this to break. We're looking for this candle right here. The low on this candle is at 1188. Okay? 1188. So if we see this candle start moving downward, that's great. But if we break this, you guys want to hop on that, okay, and write it down. Because the next area of support is going to be right around here, which is 1135 to about 1125. That's a 70 pip. Well, that's 70 pip from where we currently are. But that's at least 50 pips from the bottom of this candle. So that is how we would engineer a trade that has a very high probability of winning and a very low probability of losing. So at any point, when I talk about probability, at any point, the probability is technically 50%. 50% can go up, 50% could go down. But what we're trying to do is we're trying to change the weighting that is assigned to that 50%. Right? So that's basic probability. But what I'm trying to teach you guys is that you want to look at everything like a coin flip. It's very important. It's very important to the life of your portfolio. And the more of a novice trader you are, the more you want to think about that. Right? So guys, 10 p.m. From here onward, like I said, we're going to be range bound. Don't expect any movement till about 1 or 2. And if you're not going to stay up, if you're not in a time zone where 2 p.m. East or 2 a.m. Eastern, all right, take care, brother. If you're not in a time zone where 2 a.m. Eastern time is going to be a point where you're awake, you sit on your hands and wake up early tomorrow morning and look for a position to take early tomorrow morning, Eastern time, probably around 5 a.m. So, unfortunately, if you're on the West Coast, you're looking at about 3 a.m. in the middle of the night. Forex trading, yeah, your sleep will get a little jumped up. But hopefully your bank account gets a little bit bumped up because your sleep's getting junked up. You know what I'm saying? Anyways, guys, I'm going to hop offline. Reach out to me on Twitter. Reach out to me on the Twitter. Check this out. I made this for you guys. You see that? Hashtag FX Prime. I'm checking that hashtag. So if you guys reach out to me, hashtag FX Prime, replays right here, catch.me/fitbusinessman. 24-hour replays. Thanks for that screenshot. 24 hours will be on periscope.tv. If it's after 24 hours, it's on here. But I can't promise that I'm going to keep the videos on here forever because obviously there's too many damn trolls, man. I'm getting emails like crazy. People asking me for money. And it's like, man, that's not what I'm here for. I'm here to have some people that want to succeed, hop on the trades, and I just want to hear that people are making money, man. I want to hear that people are changing their lives. I don't want people hitting me up for money.
550 million in 20s. You couldn't hold that in 20s, man. You need a few duffel bags for that. You couldn't even hold that with a rucksack. You might not even be able to fit that in a car. Anyways, guys, reach out to me on social networks. All right? Yeah, you're gonna need to haul that. You might not be able to fit that in a Range Rover even. You might need a Yukon Denali. No, pretty sure that it doesn't. But yeah, that actually, guys, you want to hear a funny story? I have a friend that got interviewed by Goldman Sachs. Very smart dude. One of the questions in the interview, I'm not shitting you. This was an actual question on the interview for a quantitative trader. Okay, they asked him to calculate how many McDonald's balls from the ball pits at McDonald's you could fit in a 747 airplane. And he had to tell them how he would calculate that. So, could you fit 500 mil in a Yukon Denali? I'm thinking not, man. I'm thinking not. Anyways, I might have to Google that. It's an interesting little fact. But has applicability to trading. Why? Has applicability in terms of measurement, area. Credit card pimp, boom, mic drop. Alright guys, I'm taking off. There's likely not going to be any movement till about 2 a.m.-ish. Alright, so I look like a millionaire. Are you? Deca. You got to put Deca in front of that. Anyways, can you use Thinkorswim for stocks and Forex at the same time, or do you need to switch? Good question. Good question. Technical question. When you go into a brokerage account, they actually separate the foreign exchange accounts from the equity accounts. Now, why do they do that? Because foreign exchange is highly leveraged, okay? It's a highly leveraged account, and it doesn't have the same exact functionality as, say, an equity or an option account. So no matter what broker you go to, the Forex accounts are kept separate from the brokerage accounts. Now, there may be some brokers that do that differently. I don't know, maybe they have their own internal, Forex loaning program that loans from other accounts. That's what brokers do. Most brokers actually also take positions against you, if you didn't know that. It's called B-booking. So besides the accounting, brokers also loan money out. They make money that way, and they make money on the spread, and they make money on commission. So there's tons of ways that brokers make money, but the point is that those accounts are usually kept separate for accounting, and it's probably legal aspects as well, because you can't commingle accounts like that. Yeah, man, just keep hopping on. I'm gonna be here. I'm not going anywhere. I'm not sure, but I will tell you this: if a broker does not B-book, they're essentially losing money, because so I have a friend on the exchange, and actually I live very close to an exchange. I'm actually like less than 2 miles away from one of the biggest ECN exchanges on the East Coast. So the way that B-booking works is that it's kind of shady in that a brokerage can identify who is a risky player, and they will align their position against you if you are a risky player. Now, how do they determine if you're a risky player or a newbie? It's actually very simple. Newbies take positions without stop losses. Newbies take positions that are in excess of 5% of their account balance. Okay? So they know what your account balance is. Guys, your broker knows what your account balance is. All right? They have to. If they see that you're taking positions in excess of about 5%, they know that's too much risk for you to take on, and you're likely a novice or newbie trader. At that point, they will B-book you and take the other side of your trade. It sounds pretty fucked up, but the fact of the matter is that they're playing the casino house game at that point. Very lucrative for them. As a matter of fact, brokerages that B-book make about 2.5 times the earnings of brokerages that say they don't. All right. But at this point, if you have 100% here and 250% here to B-book, guess which one your brokerage is going to choose? Your brokerage is going to start B-booking. If they are at this point, I'm pretty sure every single brokerage, even if they say they don't, they're finding a way to do it, and maybe some type of side account. Trust me, they B-book. Anyways, that is that discussion right there. Now, how do you keep from getting B-booked? Well, you come across as a profitable and knowledgeable trader. A wise man once said nothing. You come across as a profitable trader. Okay? And here's what you do. You don't take extra large positions, and you start using stop losses. And your brokerage will have less of an opportunity to identify you as a novice trader, and you will not get B-booked. A little secret there. You can't say I never gave you anything, man. You can't say I never gave you anything, but that's a little secret there directly from my friend who is on the exchange. I can't tell you which exchange, but he's on an exchange, and he does computer programming on the exchange. Very smart guy. No problem, guys. So I will see you probably tomorrow morning. I have a lot of work to do tonight. I hope to get to bed early and wake up early, hopefully by 6 a.m. Repeat which aspect. Basically, if you do not want to get B-booked by your brokerage, you must come across as a knowledgeable trader, okay? Don't come across as a novice trader, okay? Don't take large positions that are in excess of 5% of your account, and don't take positions without a stop loss. Once you start taking risky positions, your brokerage will align, they will take the other side of your trade. They will take the other side of your trade. Because it doesn't pay for them to send the order to the exchange, because they get charged every time they send an order to the exchange. All right? You got to know how this game works, guys. This is a fight. Remember I told you, look at this like a fight. Look at this like you're the Notorious fighting Nate Diaz. Why is it bad? Well, basically, it's bad because it's kind of like the chicken or the egg question, right? Basically, if your brokerage is taking the other side of your position, they have identified you as having a high probability of busting and burning your account based upon mathematics. And guess what? The math game works. Because even if you win your position, if they just bet against every single person who takes risky positions, they're going to win. It's basic math. It's a coin flip again. Right? It goes back to the coin flip question. And that's why I told you guys yesterday, probability, math. If you do one thing for your trading, just study a small amount of math every single day. I'm not asking you guys to become math professors. But the more that you study, especially probability, the more you will start looking at things like the bigger players. You're going to start looking at things risk and reward. Okay? But the B-booking, if you are getting B-booked, they have identified you as having a very high probability of losing. And why is that bad? It's because they know the math. Put on a suit. I just got done with my workout, man. Alright, so I wanted to hop on here because obviously I don't have all the time in the world. So that's why I wanted to hop on if I got ready, and then, you can't put out content like this, like you're supposed to, if you want to look perfect every single time. I'm just being real with you guys. I just want you guys to make money. Right? Should you switch if you feel that way? What do you mean? Should you switch a brokerage if you feel they're B-booking against you? Because I'm pretty sure that every brokerage will find a way to B-book. Everyone will. Because they don't have to pay the ECN exchange. They don't have to send the order. They keep the order in-house. And they'll take the other side of your order. Your brokerage has tons of money in the bank When they loan you money out on margin, that's coming from your brokerage directly. They're acting as a loaner. They're acting as a lendee in your account. So they are essentially a bank. Your brokerage is essentially a bank, and that's why most banks have bought brokerages, because it's an extra form of income for the bank. So it's best to just get back. Yes. Yes, yes, yes. 100%. Kerr, if you could put that on a t-shirt and just wear it around, people will come up to you. Most of the people won't know what the hell your shirt means. The people that do know what your shirt means will probably offer you a job. And it won't be a low-paying job. All right? Because people who... I'm being 100% honest. So they don't condone this behavior. Well, there's no risk to the broker. If you bust your account, it's no risk to them. They'll liquidate your account. In a Forex account, if you get below a certain margin, you know, you have to have that margin amounts in your Forex account. And once you go below that, it's 5 a.m. or 4 a.m., depending on daylight savings time for most brokerages, where they'll just liquidate your account. So if your margin, if you go below the certain point of margin, they're just going to liquidate your account. They won't even let it get to the point of where it has risk for them. Well, Forex is you're gonna have a margin account if you trade Forex. You have to get approved for the account, and they make you sign a bunch of paperwork that you say that you understand the risks involved with Forex or futures trading. So both Forex and futures trading has a whole separate amount of paperwork compared to regular equity accounts. And they likely will not approve you, and most of the larger brokerages will not approve someone if they don't have like any trading experience and they just apply for a Forex or futures account. Scares me because right. And you know what? That's not a bad thing. If you're a newbie, then that's not a bad thing. You just got to take it slower. Okay? You just got to take it slow, but if you could literally take that risk management phrase that you just said, that is the key. The key is risk management. You know how much risk managers make at these hedge funds? All right? It's not a bad job to have. You want to know why? They're probably making about $200K a year. All right? Not a bad salary. With a bonus that's probably equal that amount. All right? Depending on how much money you are worth, you could easily make $500,000 as a risk manager at a fund. And zero risk to your own income. You're not trading anything. You're basically just managing the fund's risk or the bank's risk. No problem. So, but yes, if you had to learn about anything, it's how do you evaluate risk? How do you evaluate reward? And that is what I want you guys to take away tonight. Risk versus reward on every single trade. What is my risk? What is my reward? All right? Guys, have a great night. Thank you for joining me. Thank you for the shares. Thank you for the hearts. Thank you for the tweets. We're using 2 hashtags now, guys. 2 hashtags. Pip Killers, which is cool because I like it. I don't know. Pip Killers. I don't know. For some reason, I think of Wu-Tang Clan when I say that. And FX Prime. Those are our 2 hashtags that I'll be watching. If you guys ask me questions, comments, if you guys want me to post something, I will answer all of the tweets that go out with those 2 hashtags. I check it every single day. Every day I check my Twitter. All right? What's up, dude? Ikram, I'm actually taking off right now. It's getting late, but feel free to watch the replay. I appreciate you hopping on. Yeah, make a Twitter. Make a Twitter. It's easy to set up. It takes you 20 seconds, 30 seconds to make a Twitter. Yeah, I talked to Bail Buddy before. I don't know if he's still in the room. He's still in California, though. At least he was this afternoon. All right, guys. Now, if you guys want to know what I'm listening to, I give a shout out to musicians because I like all types of music. Trap Nation. Very cool trading music or work music. Music or work music. And I'm a big music person. Some people like complete silence when they trade. For me personally, I gotta have a certain beat, whether it's house music or trap. Yeah, Trap Nation and House Nation. It's good stuff, man. I like it. But, you know, I think what we're going to talk about tomorrow is just getting started with a beginning trading plan. Since a lot of you guys on here right now are newbies, I'm going to go into the finer details of how to set up a trading plan. And how to set it up like a real business, all right? Because if you want to be successful, that's how it has to be. All right, Kerr? How many hours a day do you trade? I'm literally watching the markets all day and have been for probably the last 5 years, literally all day, every single day. So am I in the market during that time? Not always, because being outside of the market is also a position. Okay, so if you're flat, that's also a position. If you're flat the market, that is a position. Long as a position, short as a position, and flat the market in totality is also a position. And that's what we are right now. That's what we discussed. Right now we're flat. What's hot? What's hot? Right now nothing's hot. There's no volatility. There's no movement in the markets. We talked about that, right? We talked about why there was this tremendous amount of volatility with the Fed, and then all of a sudden, once the volatility is gone, once there's no news, there's zero volatility. Is virtual reality a good investment long term? Look up what Gary Vaynerchuk says about virtual reality. Gary V, at Gary V, GaryVee. He has a lot of commentary. He knows a lot of the players in the virtual reality world. As in, he invests millions of dollars with them. So he has a very inside look at that world. Yeah, no problem, French. Thanks for coming in the room. Appreciate it. But Gary Vee is the guy to talk to with that, because he's been looking into those investments. I know he's eager to do it, but he hasn't done it yet, and there's a reason for that. If you look up, binary options. All right, you know what I'm gonna do? Let's save that for another scope, because I want to get into it more than just a sentence, and I'll explain why I'm giving you not an opinion, but I'm gonna base it on math. Okay, we're gonna base everything on math. This is not opinionative stuff. This is basically what is the math of making those decisions, and there's math associated with every decision, especially binary options. Yeah, it's probably going to be a world changer beyond what most people think. However, there is a reason why Gary has not invested in it. You're talking about a guy that has a few tens of millions to play with, and he's usually not reluctant to put that into investments, but he has not made any virtual reality investments for certain reasons. I think Mark Cuban has a few things to say about virtual reality too. So, but Gary Vee and Mark Cuban. ATI hurdles. Not sure what that stands for. But guys, I'm going to take off. It's getting late. Right now, sit on your hands. Hopefully in the morning I'll have a position for you guys to take. All right? Because none of you guys are going to be up at 2 a.m. when Asian markets open. So right now we're flat. Okay? Zero risk. Sleep well. It's okay to not be in the market. It's totally fucking fine to not be in the market. Sleep well. Wake up early. Be focused on what you got to get done first thing in the morning. Auto trader more reliable than 2 plus 2 equals 4. I'm not sure what you really mean by that. But automated trading, like I said, Knight Capital. Just look up Knight Capital. Okay? There's nobody smarter than those guys that were on that team. Let me tell you. Like I said, I knew one of them. He works at Goldman Sachs now. So losing that kind of money is not fun. All right? You want to talk about not sleeping? I don't think the guy slept for months. Anyways, man, thanks for hopping on, guys. From the bottom of my heart, I really appreciate you hopping on. I wouldn't be able to give this time to you guys without the hearts, without the invites. Yes, and that is the number one. When you manage risk well, you can get happy, but you won't get cocky, because you know that risk is a math game and you can't change math. no matter how cocky or flamboyant you are, you cannot change math. All right? It can be taken away from you like that. Diaz, thanks for hopping on. LeBoy, thanks for hopping on. Bale, I don't know if you're still on here, but thank you for hopping on, guys. The hearts mean a lot. The shares mean a lot. The tweets mean a lot. Ask me your questions. I learn when you learn, okay? I learn when you learn. Just remember that. So don't be shy if you ask questions. Go out of your way to bother me, please. Get my mind stimulated. Ask me something that forces me to say, I might not know that. All right? You guys help me, I help you. Have a good night. Early a.m. tomorrow morning. Look for me on Periscope. All right, guys? Ciao.